Hello, and welcome to this webinar presented by the IFRS Foundation. I'm Neil Stewart, Director of Corporate Outreach, and I'll be your host today. So just to start with some housekeeping, we encourage you to ask questions in the Q&A window. We won't get to all of them today, but be assured they'll inform our educational efforts and communications going forward. This webinar will be recorded and available on the IFRS Knowledge Hub. We have closed captioning enabled. You can turn it on in Zoom. As a heads up, though, live closed captioning isn't 100% accurate, but we hope it helps with the accessibility of today's content. This webinar is the first in our IFRS Sustainability webinar series, Perspectives on Sustainability Disclosure. Our objectives with this series are to fill knowledge gaps for preparers, to provide a platform for our capacity building partners to share knowledge on key topics, and to engage preparers in an interactive format that complements our formal educational resources. A quick disclaimer, the information and topics presented during the webinar do not constitute implementation guidance from the IFRS Foundation. Now, I want to say welcome to everyone joining live from around the world, as well as those listening on demand. Who's in the audience? Here's a look at our registration. Nearly 3,700 people from 116 jurisdictions, topped by the US and UK, but really spread across the Americas, Europe, Middle East and Africa, and Asia, Oceania. In terms of role, the largest groups are consultants, sustainability officers, and finance and reporting executives, as well as the accounting profession and academia. Our topic for today's episode is the business case for early jurisdictional adoption of the ISSB standards. In other words, as countries begin to incorporate the ISSB standards into their reporting frameworks, what is driving them into action? What are the benefits of jurisdictional adoption to companies, to investors, to the capital markets in general? Now, this webinar is very timely as this week, the 49th annual meeting of IOSCO took place. That's the International Organization of Securities Commissions. And just ahead of that, we saw an important call to action for ISSB global adoption issued by the organizations who are guests on this webinar. Now, who will be our speakers today? To lead off the discussion in a moment, I'm joined by Sue Lloyd, Vice Chair of the ISSB. And I want to welcome our guest speakers. Tiffany Grabski is the Academy Head at the United Nations Sustainable Stock Exchanges Initiative. David Harris is Head of Sustainable Finance Strategic Initiatives and Partnerships at the London Stock Exchange Group. René van Merrienboer, Director of Sustainable Systems at the UN-supported investor group Principles for Responsible Investment, PRI. And Fiona Watson is Senior Director at the World Business Council for Sustainable Development, leading WBCSD's work on corporate performance and accountability, as well as its new Preparer Forum for Sustainability Disclosures. The call to action issued last week by those four organizations reads this way. We call for commitment from relevant authorities across jurisdictions to adopt the ISSB standards, IFRS S1 and IFRS S2, on an economy-wide basis by 2025. It has been endorsed by more than 120 signatories, signaling huge global support. Sue, it would be great if you could start us off by providing some context, considering this week's IOSCO meeting, as well as our inaugural jurisdictional guide for the adoption or other use of ISSB standards, which was just released.
Sure, Neil. And let me start firstly by thanking those of you joining me today, and indeed the signatories, for that wonderful support in the call for action, which is so exciting for us at the ISSB. So big thank you. I know there's a lot of work that goes into documents like that. But this week, yes, a big moment for us in Athens at the IOSCO annual general meeting, so the International Securities Regulators, for a few reasons. So firstly, we launched our inaugural jurisdiction guide, which is a document that we've developed that sets out materials to help jurisdictions when they are making decisions and designing their paths forward in their journey towards the adoption or other use of the ISSB standards. So it's an important resource for jurisdictions. And it also sets out a framework that we will use at the Foundation to describe what's happening in different jurisdictions when it comes to their sustainability reporting, to provide really important transparency to the market about what's happening in individual jurisdictions, so investors in particular know when they can make comparisons with confidence between the information coming from particular jurisdictions, and also that enables us collectively to really keep monitoring the progress we're all making towards the global baseline of information to meet the needs of capital markets. So a really important document to support those two aspects of the journey. We also published a sort of accompanying document, which is an outline of our regulatory implementation program, because we've got a really important role to play at the foundation, working in conjunction with our partners to support the adoption conversations and decisions being made by jurisdictions around the world, and to support capacity building. And so that regulatory implementation program that we published sets out the tools, the educational materials, and the plan that we are going to put in place at the foundation to then work with our partners to help them as we reach many stakeholders around the world. So two important documents. It was also an important moment to take a little bit of a stock take in terms of where we are on this journey towards the adoption of the ISSB standards around the world, just a year after we, well, not even a year since we published S1 and S2 at the end of June last year, and IOSCO endorsed our standards for use in July. And it's really good news to see the momentum that we can see in the market already, with more than 20 jurisdictions having already decided to use or taking steps to introduce our standards in their legal and regulatory frameworks. And these jurisdictions represent nearly 55% of global GDP. So we're talking about a lot of momentum here. Nearly 40%, or more than 40%, sorry, of global market capitalization. So we're really excited to see the speed of progress here. And when you look at the range of jurisdictions, actually, it's really interesting to see a variety of, very well-established capital markets like Canada and the UK on that list there, but also a number of emerging markets and developing economies that have really seen the benefit of being able to attract capital to fund much needed transition, and also to provide information to their trading partners to support their economies as well. And a really important piece, which I'm sure we're going to come back to again today, is capacity building. One of the things that we do through this jurisdictional guide is identify where we need to provide capacity building, and the regulatory implementation program is designed to support these capacity building initiatives around the world. So we get the use of the standards and the market's really ready to apply them, and to apply them well. So I'll hand back to you, Neil.
Sue, thank you. Thank you for getting us started. And it is indeed great to hear about the momentum and the more than 20 jurisdictions. As you said, more than 40% of global market cap and 55% of global GDP. Interestingly, over half of global greenhouse gas emissions represented by those jurisdictions moving towards adoption. So really fantastic momentum, as you say, just less than a year since we launched the standards in June 2023. Now, let me turn to our panel for their views on jurisdictional adoption, with our panelists really representing the different sides of the disclosure ecosystem. So PRI representing investors, WBCSD representing businesses, London Stock Exchange Group, and UN Sustainable Stock Exchanges Initiative really representing capital markets overall. And a reminder to our audience that after this initial round of comments, we'd love to take your questions as well. René from PRI, let me start with you, and from your perspective within the global investor community, why is this call to action important now? What do investors need in terms of sustainability disclosures, and how will the ISSB standards serve them?
Yes, thank you, Neil. And investors, as primary users of disclosure by companies, really consider data on companies' risks and opportunities, and what they mean for future prospects across various sustainability issues. So this data really informs investment decisions, but also stewardship activities such as proxy voting, engagement with corporate boards, and ultimately also their own reporting, both from a regulatory perspective, but also to clients, beneficiaries, or even to commitments like net zero initiatives. So when they do all those things, investors are looking for what we call decision useful information. So that information has to be available and accessible. So that means the data is actually in a format that investors can use. It has to be of sufficient quality, meaning that it's comparable both across time periods, companies, etc., but also that is verifiable, so that the data or its methodology can be corroborated and it's transparent and or assured. And finally, investors are also looking for data that is ultimately a fair representation, so unbiased. So these are all kind of like the qualities or the conditions of the data that investors kind of need in order to use it in their investment decisions and the other activities that they do in our day-to-day basis. But what investors have struggled with is to actually get that decision useful data from companies. And this has been an issue for a long time due to the patchwork of voluntary standards and frameworks out there. So that's why the PRI is really supportive of the ISSB standards. We really believe this can address the challenge by creating a global baseline for reporting on sustainability risks and opportunities. In other words, companies disclose against the same requirements in a standardized way, based on established reporting initiatives like the TCFD recommendations and SASB standards. So we think both the ISSB standards are crucial in that regard. So IFRS S2 obviously, brings in a clear standard for this climate disclosure requirement. And then we also have S1, which contains reporting principles building on the IFRS accounting standards, which are really meant to bring the quality of sustainability reporting closer to financial reporting. And that's what investors are looking for. But to really be a global baseline, the standards have to be implemented by companies across the world. Like I said, investors are looking for comparable data across companies and periods in their portfolio. And investors typically are, operate globally. So we need companies globally to adopt. And the most effective way to achieve this is by jurisdictions adopting the standards. So by regulators, going out there and saying, these are the standards that companies have to follow. So our sign-on statement that we've just kind of highlighted, the call to action, is that strong signal of support from investors, but also the market as a whole.
René, thank you. And I'm glad you started off with that reminder that investors really approach this from two sides. They are users of this information in their investment processes, but they're also they're also reporting to the market as well. And so they have both perspectives. And I like too the way you outlined the qualities and conditions, the data availability, accessibility, high quality, verifiability, the unbiased nature of it, all making up decision useful information. So very, very helpful way to get started. Now, let me turn to you, David, London Stock Exchange Group. And how do you see the standards supporting capital markets more generally, and considering factors such as access to capital for businesses and pricing of risk and the investment flows?
Well, thanks, Neil. Thanks very much for organizing today and for having me here as well. So LSEG sits right in the heart of this climate and sustainability reporting debate. So on one side, we're supporting the investment community and finance community that René was talking about. Those investors are not crawling through company reports typically themselves. They're using a lot of the data vendors and providers to do a lot of that work for them. So we're providing them with the data, the analytics, the FTSE Russell indexes that we calculate. And one of the big demands that we see is the need to integrate climate into all of that. At the same time, we're also supporting corporates, the corporate community, issuers who are raising capital, including on our markets. We're trying to navigate all this, understand what the reporting means for them. And as you were saying there, we're a listed company in our own right, so we're also having to do this kind of reporting. And so we see it from all of those different angles and deeply appreciate that there is an incredible need for high quality, consistent, comparable climate data. And because this is being used at scale by the investment community, and therefore the quality of our data analytics and indexes is directly proportionate to the quality of that reporting, and indeed to the ability for the financial sector to be able to act on climate. Now, we're also very cognizant of the real and growing reporting burdens on companies, which are huge and particularly complicated when they're having to hit different reporting requirements in different jurisdictions. And I think the case has been won for most companies that this links to cost of capital, that they can see that the incredible movement across the financial sector to integrate climate considerations into investment and financial decision making, and understand that they need a report, and that the financial sector will assume the worst where companies are not providing this information. So generally, most companies are happy to report this information, but they want to do it once well, and not in a myriad of different ways. And that's really why LSEG is such a big supporter of the work of IFRS, ISSB, and IOSCO here as well. And we've been calling for these global standards for a long time. And we were delighted to be able to host the London launch of S1 and S2 back in June last year. And it was at that where we originally called for governments to get implementing and start that process by 2025. We were delighted when David Atkin, the PRI CEO, was at the launch and backed that call to action. And then we've been working with PRI and then obviously with our colleagues at WBCSD and UNSSE to broaden out that call to try and to show to policymakers, governments, regulators that this is something that industries right across the market are calling for. And so we were really delighted with that level of support that we've achieved with that call to action.
Excellent, David. Thank you very much. And great to get your perspective on that and to hear you talk about, being cognizant of that burden on companies and having to balance that against the tremendous need of the markets now to move capital in the right direction and the need for information to do it. So that's a good overview from, as you say, LSEG right at the center of this equation. Let me turn now to the corporate perspective. Fiona Watson from WBCSD. And this is really not just about compliance, is it, Fiona? Can the standards help inform strategy and risk management and really ultimately drive performance and value creation?
Great question, and echo thanks for hosting this event and driving what is such an important dialogue around these standards, because the short answer to your question is yes, absolutely. So within the WBCSD community, over 220 large global companies who are leaning in on the sustainability agenda, we already see early proof points for that assertion, not least because the standards do leverage and build on existing frameworks such as TCFD. But we know it's a patchwork. René referred to that. So we see where it's coming through. It's just a small percentage of companies. And in many cases, they currently stand out for having shown leadership on this topic, which is why the global baseline now is so important. The standards S1 and S2 set out a very clear framework for companies to consider sustainability and specifically climate-related risks and opportunities. And coupled with the strong signaling from much of the investor community, which we're hearing come through today, all boards and management teams can now be clear on that global baseline framework for identifying, assessing, managing sustainability risks and opportunities, aligning their strategy and putting in place the processes, controls, and governance frameworks that support the exercise of what is ultimately their duty as directors of the company. Because we know it's costly, we know there is enormous churn, but comes to that board level duty. And ideally, it therefore becomes a strategic ongoing exercise that helps drive that risk and opportunity management, identifying gaps in performance and driving business action, mapping and engaging with their supply chain. But above all, it really gives directors better information to make what are these very tough decisions on what is material, what is decision useful information around these emerging complex integrated sustainability issues. How do they determine what could reasonably affect an entity's prospect over the short, medium, and long term? So the disclosure that emerges as a result of this process should just be the tip of an iceberg. So by integrating the standards into the mandatory reporting framework, it means that tip brings the trust, credibility, and confidence in the disclosures, what is ultimately where we see the value creation and the capital allocation towards that transformation, and hence such strong supporters of early adoption of the standards.
Excellent, Fiona. Thank you for drawing those connections. And I think it's really important that you talked about the value chain, you talked about strategy, enterprise risk management, really starting to get the board level and the C-suite view, and making a strong point that this is not just about disclosure or reporting to investors. This is about really using data to drive performance. So very, very useful. Thank you. Now over to Tiffany, and from the UN Sustainable Stock Exchanges Initiative, and we're at an inflection point in sustainability disclosure. How do you see this transition from voluntary to mandatory disclosure and the role of standards? And importantly, what's needed to help markets through this transition in terms of upskilling and other capacity building?
Great. Thanks so much, Neil. Thanks for the great question. Thanks for having me today. And thanks also to your team who put together this webinar. Really happy to be here. And I think it's something that's really needed to keep talking about this. I think if we're going to move forward and if we really want to get to the point we need, there's two things I've heard already today that need to be reiterated, and that's connectivity and knowledge and capacity building. So from the connectivity side, I think something that sustainability related data and reporting actually really forces us to do is addressing the many connections between businesses, their employees, the society around them, the environment, etc. But what we can't forget is the connectivity between markets. We can't do this in silos from one market to the next. And no regulator or stock exchange wants to isolate their market and prevent investors from other markets from investing. So this is why it's so important, what I think almost every person has said today, is having this global baseline. And by baseline, we really mean we need to be speaking the same reporting language, just at the most basic level. We need to make sure that the most basic understanding is the same from one country to the next, regardless whether that reports in Spanish or English. It should still make the same sense to everybody. So I think that's really the first thing, is this global baseline allows us to connect the whole world on these topics. And that's really what we need if we're going to move forward in any way that's going to have any productivity. But then the second is knowledge. Neil, I'm so happy to work with your team so often on capacity building. But as we realize when we do training together, is there's a lot of capacity building to do. So that other aspect is really essential. And that's not just technical capacity, which is what we often get used to talking about when, in our circles of reporting nerds, we think about, the accounting nerds and all the report preparers that need to have that technical capacity and upskilling. But it's actually much broader than that. It's general knowledge and understanding of this topic. So we've been working with stock exchanges and their regulatory authorities for many years now. And that's really the key thing. Without any doubt, what we always need alongside any sort of regulation is capacity building. There is, of course, a very deep technical capacity that's needed, but I think what we haven't really touched on yet is making sure that everybody in an organization really understands why it implicates them and why it adjusts their team and their thinking. So I think it's really interesting to look at the training we've done so far, and we generally expect when we do training with a stock exchange on a reporting topic to have a lot of accountants and report preparers on the call. But what we're seeing with ISSB, which I think is a real win, is actually all parts of the organization are joining, and all levels as well. It's not just the board members that are joining or the leadership that is joining. It's every team at all levels, and we're getting really actually numbers from all parts of an organization. So I think those are the two things that we really need to continue focusing on. We need a broad capacity building. Everybody needs to take part. Every partner needs to join in. We need to make sure that every part of an organization understands the real value in understanding this global baseline. But then we need to all speak that same language too, and make sure that connectivity is there.
Fantastic, Tiffany. Thank you. And I like your focus on, as you say, connectivity. And we often when we use the word connectivity, we're talking about connecting sustainability and financial performance. But you're talking about connecting the world around these issues, and that's a really, really important point. And then, of course, building knowledge, or as we say, capacity building knowledge and processes and so on. And we, of course, really appreciate the partnership we have with the UNSSE in doing that. Right. Well, thank you all for your comments. Let's, the commitment, the support from our partners is so instrumental in achieving this global baseline of high quality sustainability disclosure. So let's go now to questions from our audience. We've got a lot of questions coming in. As I said before, we won't get time to address them all, but they do inform our perspective on what knowledge is needed in the market, inform our communications going forward. Well, let's take a few as sample questions. And the first one I think would be good to go to Sue with. And the question is, a concern that we all share is the reporting burden on preparers and the needed interoperability between multiple standards and requirements. Can you elaborate on the collaborations between the ISSB and EFRAG in Europe, as well as with GRI?
Sure, sorry, just trying to unmute myself there. I will, but I'm going to start with the global baseline, and that's been touched on a number of times, because I think the thing we really hope for is that jurisdictions really pretty directly use the ISSB standards, because that's the most straightforward articulation of our work into the market, and that's when it's easiest for companies, because they're just requiring the same, using the same requirements for different purposes around the world. So that direct application is very efficient and effective. But there are, of course, situations where we do need to think about interoperability, and the two that you highlight are really important ones. So let's touch on those for a second. So one really important source of interoperability is between the European standards, ESRS, and our standards, for the simple reason that Europe got started before we were even born. And so we have been trying to make sure that that doesn't create a challenge for companies. And we're really delighted that by working in very close cooperation with the European Standards Setter, EFRAG, and the European Commission, that we got to a situation where we were able to align many definitions and many disclosure requirements, particularly on climate, where we've both got specific disclosure requirements. And just 2 weeks ago, we published an interoperability guidance document, which I recommend everybody have a look at, which explains how a company can really efficiently, with a few guidelines, provide disclosures which would be useful both to meet the ISSB's requirements and the European requirements. So you only have to do it once. So it's all about this efficiency and effectiveness that a number of speakers have spoken about, which is so critically important. So that's Europe and us. So that's very important. The other really important relationship, and just last week we issued some news about sort of deepening our collaboration, is with the GRI, the Global Reporting Initiative, who of course also focus on global sustainability reporting with a view to broader stakeholders, whereas we're focused on investors' information needs in particular. And we know that some companies want to be able to report both to investors using our standards and to broader stakeholders using the GRI standards. And so we've agreed to work together to find common disclosures that we can align. So again, a company can very efficiently and effectively both meet the ISSB requirements to communicate to investors and also report using the GRI standards as efficiently and effectively as possible, because all of this about making sure that companies are actually managing sustainability risks and opportunities, not just spending their time preparing reports. And we want to do what we can to really support that.
Sue, that's such a great point that you make just at the end there. And this is something that we hear all the time from companies. And in fact, it's a good segue into the next question. And I think it's a good question for Fiona. And that is, it's exactly as Sue pointed out. The question here is that all this burden on reporting really has an impact on what we can actually do to have in terms of action on environmental, social, and governance topics. What are your thoughts on the potential burden of reporting frameworks on companies at the expense of operationalizing sustainability, and how do the ISSB standards help mitigate that burden?
Yeah, thank you. It's a great question, and it's a conversation that we have actually all too often, because it is very unfortunate when it's seen as a trade-off. Because these issues, these sustainability related issues and climate change in particular, they don't just become material because there's a standard, right? They don't just become material issues because the ISSB has produced a reporting standard or EFRAG has a reported standard. There is an underlying scientific basis for concern on these issues. So engaging in them and putting the building blocks in place to make sure that your performance management, your risk management, your governance structures are absorbing and identifying, measuring, managing, and then perhaps reporting on them is extremely important, because that's where we see the business case for long-term value creation is on that resilience and on that insight and on the decisions that are made as a result of it. So the reporting is really just an output of a process which should be responding to the unfortunate scientific reality of the situation that we're in.
Excellent. Thank you, Fiona. And I like that point. These issues aren't material just because the standards, suggest that they are, that these are material to the performance of the company, right? This is, and you would think that they are already part of a company's enterprise risk management and indeed strategy. here's a question that's directed at you, David. And the question is, how do multinational companies with long value chains prepare for ISSB standards, and I would say more generally for this new era of disclosure? And it's something I think a lot of companies are struggling with in terms of the quality and availability of data, and for example, around scope 3. But do you have any advice then for multinationals?
Yeah, I mean, it's the same really true for all companies of varying complexity, but everyone just needs to get going on this. Now, I appreciate that the complexity for large companies is significant, but they will also have some more resources, smaller companies, to work on this. But it's not letting the best be the enemy of the good. It's being very transparent about the assumptions you're using, the data sources you're using. Some areas like scope 3 in particular are very challenging, but I just recommend that you be as transparent as possible around the assumptions you use in how you calculate that. What we're seeing is that around half the companies that are reporting, say, scope 3 are realizing perhaps in the second year of reporting that there's a better way of doing it and are having to restate. I mean, that's obviously it's never ideal having to do that, but it's just because we're all learning. I think there is an acceptance, and including by the investment and finance community, that this is a journey, and so get going on it early. Get advice, talk to others, but don't delay. You'll get better as you go along. It's a learning process.
Good, thank you, David. I think that's good thoughts. Question for you, Tiffany, and thinking about capacity building. And I think I'd like to tie two questions together, actually, and think about what does good non-technical capacity building look like? Could you tell a little bit about how you upskill the world of companies? And also, what about small enterprises in particular? Now, I know that you represent stock exchanges, so by definition, listed companies, but also just think about smaller enterprises, even unlisted ones, and what they need in terms of supporting adoption, helping them stay on top of sustainability reporting.
Thanks, Neil. Both good questions. So what does non-technical capacity building look like? I think it means breaking down the technical terms and being accessible. We don't want a standard that only certain people can read. We don't want a standard that people are afraid to open up. And that's really what we focus on in our training, is making sure we're kind of breaking down any of the barriers that prevent anyone within an organization from moving forward. And as I was touching on before, I think that's absolutely essential, because as you start developing these reports and as the actual accountants and the report preparers working on it pull together the data and learn the standard and make sure they're reporting it in an appropriate way, they still need the data from the rest of the organization. And we're not talking here just about numbers. We have to understand if the appropriate governance structures are in place to be able to foresee these risks and opportunities hitting an organization, and if the risk management processes in place are also adequate to be able to do that. And that's not something an accountant does, right? It's something that the whole organization has to work together on. So we really need to break down those terms. We need to talk in really normal language that everyone can understand, and bring kind of everyone in the organization along on this journey, so that we not only have better reporting practices, but actually more resilient organizations, which I think is all of our objective at the end. And then SMEs play an important role in that. Even though we work with stock exchanges, it's often assumed we're dealing with very large companies, but actually we have a lot of smaller companies come along that journey as well. It's either because they're in the value chain of a large listed company, or they're maybe listed on an SME listing or segment of an exchange, or they're working with the stock exchange to think about getting listed in the future. And they know that this is going to be something that they have to think about in the future. But as you know, we've already been talking about, that value chain is so essential, especially now that we're disclosing, for example, scope 3 emissions. We need to understand what's happening in our value chain and the companies we're working with. And increasingly, regulation is including that as well. So we can't just do it alone. We can't just pick our biggest companies and say, you guys lead this battle. We need to do it all together. And sometimes we're seeing actually smaller companies are leading the way, because they're ingraining it from the beginning, and making sure that that's well understood from the beginning. So we'll keep trying.
Great, thank you. I like it the way you put that. We're not just getting to better reporting; we're getting to more resilient companies, and this is, and that's so key to what we're talking about here. Let me go to René, and a good question for you. Again, from thinking about the point of view of investors, do you think that standardized mandatory reporting will reduce the number of questionnaires from investors and ratings and rankings verification that companies have to do just now? Companies do see this as sometimes overwhelming, the volume of incoming requests. Do you think that's going to be helped by standardized reporting?
Thank you, Neil. And I think the short answer is yes. I think investors do a lot of questionnaires and follow-up and engagement with companies because they're looking for certain data. And I think, like I've kind of described at the beginning of the panel, they do so because they're lacking that consistent and high quality and comparable data. But I think as we go along and more companies start to report against the ISSB standards, the quality and standardization of that reporting is going to increase. And that's going to also reduce the need for investors to engage specific companies to get that data because they can actually already find it. And I think David also kind of already told about the role of ESG ratings and data providers in this ecosystem, and they build their products on that data that is reported. So the better that quality of the data, the more likely that data providers also don't have to come back to companies and say, what's that data point? We're trying to fill that gap here. So I think it will certainly help with also providing relief to companies on that process, which I know is very resource intensive.
Very good. And I think preparers will be very pleased to hear that. Let me go to I think a last question. We'll go to David, and then we'll turn to you, Sue, for some closing thoughts. But David, this is a common question that we're getting just now. The TCFD recommendations are really built into the IFRS sustainability disclosure standards, as you know. There are thousands of TCFD reporters around the world. And so a very common question that we get is, what do we do if we're already doing TCFD? Should we keep doing it or switch to the ISSB?
Thanks, Neil. Companies, this is the direction of travel. ISSB is coming. So I think the advice is get ahead of it. We'll also be doing that at LSEG. We're looking to report based on ISSB S1 and S2. So the advice, I think, has to be get going on it. You may find that there are possibly some, the overlap is very, very high. So it shouldn't be a huge shift. And if there are certain elements that are in TCFD that you feel you need to report, I guess you could do that in the interim. But I think the main point here is don't wait, get going, get reporting on ISSB.
That's great. As you say, the best time to start is today, right? Good. All right, David, thank you, and thanks to all our guest panelists for your comments. And Sue, going to you for some closing thoughts, and having heard the comments from the groups behind the call to action, what would you add in terms of the ISSB's own message to preparers and other stakeholders?
I think the panelists have said it very well. So maybe just to highlight a couple of things from me. I think really the call to action demonstrates, this really strong support for the use of our standards by companies voluntarily and by jurisdictions as well. And I think that the panelists made a fabulous case now for why that makes sense. And what really struck me was, if I can indulge myself for a couple of seconds, Neil, in terms of some of the key messages was, we often hear, this is really important information for investors, globally comparable, robust to support capital allocation. Of course, that's the core business that we're involved in. But there's a lot of benefits for companies here. And I think it's really fabulous to hear some of that today, the efficiency benefits of the global baseline and the fact that the things that you're being asked to think about are not being asked to think about just because it's what investors are interested in, but it's what you need to know to run your business, to really focus on the stuff that matters, to manage risks, and by the way, identify opportunities in your business that really supports value creation. So I think there's a win-win here for both those consuming the information and those preparing it, and that really came through today. And great to hear the comments about how it's a whole company exercise. It gives me faith that this isn't just about compliance, that this really is about understanding risks and opportunities better, managing companies better, creating value, and what's not to like about that. And so in terms of where we are, so the call to action really demonstrates the strong support for users and preparers to use our standards. So fantastic to see. The jurisdictional adoption guide really encouraged people to have a look at that, to see this as a really important milestone to support jurisdictions and their really important adoption decisions, and to move to the transparency that market needs on the progress we're making towards this globally comparable information. If you're a company using our standards and you're reading our words and you're like, oh, I'm not quite sure I understand what to do here, the good news is we're set up to help you at the foundation. We've set up a transition implementation group. You can submit questions to us, and you can get a discussion at our group as long as it meets the criteria. And we really encourage you to engage and make use of the support that we're ready to provide there. And the last thing I'd say is, I've told you lots of fabulous news about progress here. It could sound like it's done. And the good news is we've got great momentum. The bad news is we've really just started, guys, because in most cases, these 20 jurisdictions are asking for feedback from stakeholders on whether they should go that step and align with the global baseline. So if you like what you heard today, or you like the idea of the global baseline and the work of the ISSB, we still really, really need you to help us with these last pushes to make sure that we actually see these standards used. We actually see this information provided in the market. It's not just the theory of what we can achieve, but the reality. And we can't do that unless our stakeholders really help jurisdictions to make informed decisions. So please look out for consultations around the world and help us to deliver the global baseline.
Sue, thank you very much for those inspiring closing words. And thank you to everyone who participated today. And thank you to our partners for your insights. I'd invite our audience to stay involved with the IFRS Foundation, including through this webinar series. So follow our LinkedIn and our news updates to learn more about what's coming in this series, covering a variety of topics. And next up, we're going to be looking at the resources to help preparers get started with the ISSB standards. And also, the next after that, we'll look at the value of industry-based disclosures. You can also register for the next IFRS conference in London, the 24th and 25th of June, as well as our joint event with the London Stock Exchange Group to kick off the London Climate Action Week and celebrate the first anniversary of the ISSB Standards. So David talked about the big celebration last June. Now the next one is coming up this June. So that concludes this first webinar. I'm Neil Stewart with the IFRS Foundation, and on behalf of the team here, thank you very much for participating. Until next time, goodbye.